What's up, traders? This is Vee Trades, and today we'll be doing a technical analysis breakdown for strategy B with the ticker symbol MSTR. I will first be going over what I see in the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at the daily chart for strategy or MicroStrategy if you prefer. It looks like price gapped down lower, and price was trading right around the 367 level. And then later in the afternoon, we did see a rally back up to the mid 370s. So it looks like this upward sloping trend line is representing that slight bullish imbalance. Price is making higher lows. As you can see here, there was a low back over here, and then we had a higher low, and now recently we have another higher low. So we'll see if this continues and price can move up higher off of this level, or we're going to still face this downward sloping trend line where price is making lower highs. This is a high right here, lower high, lower high, lower high. And let's see if that downward pressure forces the bulls to give up, and we do see a breakdown lower. So the EMA is flat. There's a bullish imbalance. There's a bearish imbalance. So there's always a time to buy. There's a time to sell, and there's a time to do nothing. So in this case, it's time to do nothing because there's not a strong imbalance between buying and selling pressure. The market is in an equilibrium right now. So you can pick a direction, but guessing most likely will lead to you getting it wrong. So it's not really showing any clues which way it wants to go. We have a downward sloping trend line, upward sloping trend line. We have a short-term bear trend right over here. Let me go and circle this. This is the bear trend right here. This could be a bear flag where we have the pole right here, and this could be the flag for another leg down targeting the 323 level. At the same time, this could be a bull flag. So we have a pole, and this could be a flag right here for another leg up towards the 550s. So who knows which way it'll break out. As of right now, you can make a guess. Even I'm not sure, and that means most likely other traders are not sure as well. So we'll see how this plays out. We have the FOMC meeting tomorrow. We'll discuss the interest rates. So I think that's why the market is kind of balanced right now. It's waiting for some catalyst to occur. But eventually this will break out higher or lower. It's not going to continue staying this balanced forever. That's just not how the market works. So a breakout is near. And I think like someone said in the comments, the time where you kind of throw in the towel or the time you sell is probably the time it starts moving up higher, right? The market knows when people are ready to give up and throw in the towel. That's what it's designed to do. It's designed to play with your emotions. It knows when the amateurs and the retail is going to give up, and that's when they'll finally drive up the price. So I feel like that sentiment is definitely out there. So there's a good chance that even if we do see a breakdown lower, I'd say it would probably just be a bear trap. I don't think there's a lot of room to the downside. I think most likely it will rebound for higher prices. So I'm expecting higher prices regardless. Either we break down lower towards the 320s and then move up higher, or we just move up higher, not getting below the 358 level. So let's see how this plays out. Let's take a look at Bitcoin's chart real quick, see if we can find anything on there. So here's Bitcoin's chart. And to the normal person, this might seem random, but to me, it's actually playing out according to typical performance. So because price broke out of its prior all-time high right around here at the 102 level, even though you do see candles above the 102, that's because we're on the daily. But if you look at the weekly, it's going to show you a different picture. So we saw one leg down or one attempt by the bears to get below the 102 level, and they failed. Price went up higher. We saw the second attempt, they failed. Price pulled back. Now we're seeing the final attempt. So you could say that the second attempt is in the pair of twos. So you see that this is the first attempt, pull back. All this is the second attempt, but the second attempt has two parts, 1, 2. So you could say, like 1.5, 2. So to make two attempts back. So 1, 2. So usually the market moves in twos. It moves in attempts, not guarantees. So the bears are struggling to get below the 102, 103 level, which tells me that the breakout is most likely going to succeed, and we could see a move up higher. Bears are also targeting the $99,000 level. So let's see if they can get there. If they don't, that's even more bullish because that shows signs of weakness. If the bears were able to make a leg this large previously and they're not able to do it again, that shows signs of weakness, which means that we can see a nice rally develop. So overall, Bitcoin also waiting for potential catalyst to occur. It's been kind of flat for a while now, basically since May. So that's already been a month, basically just sideways trading with a little bit of volatility. This trend basically since it started has been kind of slow. maybe sooner or later it starts to pick up and it starts, going into that exponential move. But as right now, this is still bullish. If I show you guys on the weekly chart, uh, it'll look it's going to look more simpler. So this is the prior all-time high, and you can see I have that horizontal line right around 102, and you can see that this was resistance. Price broke through that resistance, back tested it for support, tried to rally, failed, back testing it again. So most likely after 2 attempts, we will see price move up higher. So sometimes you'll see a breakout like this. You'll see a level, and then price will just break out of it and rocket up higher. But even then, look what happened. If I draw a line across this level, even after price rocketed up higher, it took several months for it to finally try to come back to that level and then take off higher. So a lot of times price likes to test these breakout zones. A couple theories are that, there's unfilled buy orders left there. There's break-even stops by traders. So there's a lot of reasons why the market comes back. You could just say it's searching for liquidity, and then it's moving up higher. I could probably find a bunch of more examples of that. You could say right here, this is a double test of this breakout. So here, you draw a horizontal line. This was resistance, and then look what happened. Price broke out, tried to go down below that level once, failed, rallied. It didn't just continue moving up. It made a second attempt lower, failed, and then we saw the rally higher. So you see that was one leg back, failed, 2 legs back, failed, and then rally. So even just looking back, a couple years ago on the same chart, we can see something similar playing out. So same thing happening now, just a little different structure, but that's what I'm trying to get at, that, this is still okay. We're not in the danger zone yet. This is still setting up for higher prices. Let's go back to MSTR. So let's see how this plays out as the Bitcoin Treasury list. Still number one. They own about 2.82% of the max supply that will ever exist for Bitcoin. So congratulations to Strategy. That's a very large amount. If you just go back to First Principles by Jeff Booth, the natural state of a free market is deflation. What does that mean? That means as technology continues to improve over time, that should reduce the cost for everyone, because we use things that provide more value to us. We're not going to buy the more expensive thing. We want to buy the cheaper thing that's also giving us the same value. So that just continues to exponentially get better over time, which means that, prices should go down over time. And the only thing that's allowing that to reveal itself is Bitcoin, because it's not being manipulated. It has a fixed supply. So that's why, you want a company building on top of that new system, which is MicroStrategy. They own 3%, almost 3% of, an asset that most likely everyone will get in the future. So that's all I have for MicroStrategy on the daily and weekly daily chart. Let's take a quick look at the weekly chart, and we're gonna have to look at the log scale for this, and remove all the drawings again. And just looking at the weekly, it looks fine. We're just pulling back to that EMA. Looks like we had a nice move up higher, slowly correcting lower, which is a good sign too. It would be different if price sliced right through the EMA. If we did something like this versus what we're getting right now, kind of like a structured breakdown, then that would be more dangerous. Why? Because that shows strength by the sellers. Usually after a move up higher and we see, a small retracement, that can lead to higher prices because the bears are not strong enough to bring it back down to where it was previously. So that's what this is showing. It's showing that, majority of the move up higher has still been intact. If you do like a retracement tool, high to low, let's take a look at that, a low to high. We only retraced about 30%, from the low to high. Sometimes we come back down to 50%, maybe even the 618. So that's at 306 before we move up higher. So this is still showing signs of strength in the short term, even though, yes, it's taking a lot longer to play out. And then the long-term trend lines are still holding as well. Those are not changing as of right now. So we do have these long-term trends still in play, which means the uptrend is still in play. So all I have for MicroStrategy on the daily weekly charts. This is Vee Trades, and thank you for your time.